Hello and welcome to today's topic titled A Beginner's Guide to the Daily 20-Day Moving Average. So in this short lesson, I'll be teaching you the powerful 20-day moving average. So if you do not know what is a moving average, let me just explain. It's just the average price of 20 trading days. You divide it and then the computer will just plot it as the days go by. So you don't need to worry about it. You just can use a simple moving average is what I use, and the computer will just, once you input the 20-day moving average, it will calculate and the lines will appear on the chart. So in this chart here, we have the 20 MA. Right, it's moving up and down, up and down and up. So I like to color it red. You can color it whatever color you want. You can make it thicker or not so thick. Okay, it's really up to you. So there are three things that you will learn here in this lesson. Is number one, why is the 20 period day moving average so important? All right. And secondly, I'll teach you how to use it to find good stocks. And thirdly, I'll also teach you how to use it to avoid bad stocks. Now, the 20 MA is a short-term trend following tool. It's a lagging indicator. That means sometimes price will go up first before it tends to go up. But it is still very powerful, as you can see. So if you are using a lagging indicator, it doesn't mean that you are at a disadvantage. With all tools, right, it's up to the person who use the tool, how skillful they are, and the more experience you have, the greater the use of the tool will be. So even if a very good tool in the hands of a beginner might not be good, but a moderate tool in the hands of an expert can yield a lot of results. And the 20 MA is not a moderate tool. It's actually a very powerful tool that many traders and technical analysts put on their chart. So here's the takeaway from this first chart is that if the 20 MA is rising, the stock is in a short-term uptrend and it usually will go higher. So if there is nothing you learn from this lesson, always remember this. You want to look for stocks that have a rising 20 MA. That means that if the stock has an MA that is rising, let's say starting here the 20 MA is rising, right? This tells us that the stock is in a short-term uptrend and it usually will go higher. Just look at it. Here the MA was flat and it started to rise, and all the way see how the S&P 500 futures go up all the way. So it's a very powerful tool. You can use it in any stock, any markets, whether it's cryptocurrency market or the futures market or the commodities market, whatever it is. Once you learn this, you can transfer this skill to any market that you want. So when a stock is trading up and down the 20 MA, it does tell you something, that the stock is in a sideways trading. So you can see the stock here. I've drawn a square here, and you can see the 20 MA, this red line here. The stock goes up and down and up and down and up and down and up and down. So what this tells us is that this stock is actually in a sideways trading mode, and it is very, very difficult to make money for most people. If a stock is trading sideways, you want to have a stock that is going up. That's usually how most people make money. So when the stock is trading up and down the 20 MA, try to avoid those stocks. But you can see starting here, when the 20 MA starts to rise, it can often point to short-term run-ups or bullish gains. And from the early 2024 until about April right here, stock has been just going up, and we can find the reason why is because the 20 MA is rising. All right, we are looking at technical reasons, not a story. Yeah, there's good stories about stock. This is a stock of Nvidia, and it has a very nice story of how its chips is powering so many things, especially AI. But we are looking at technical reasons, and the technical reason why it's going up is because the 20 MA is rising. When it's rising all the way until here, look what the stock is doing, going up. But when the stock drops below the 20 MA, this does not tell us that the stock is going to crash or anything. It just tells that there is a slowing down of bullish momentum in the short term, slowing bullish short-term momentum. So usually some people you can use the 20 MA as a guide when it falls below the 20 MA. Some traders might want to take profit, and maybe they don't want to enter short-term long positions. Okay, so don't worry about whether you get it the first time or not. This is a YouTube video. I post it, and you can just listen to it again and again. And maybe as you listen to more and more of my analysis, you'll be able to understand more and more things. And you can, the next time you view this video again, you'll understand it more. So I do a daily stock market analysis, a stock analysis. Do check out, because it can help you to understand a lot of things better. So here I colored this area green. Why? Because this is an area where you can make nice amounts of money if you're long this stock. This is stock of Apple. D means daily. When the stock is above the rising 20 MA, this is the best time to buy it. It is in a short-term uptrend. Look at the 20 MA is rising. All right. This is how you find stocks that are good to buy. So when there will come a time when the stock will drop. For example, here you can see the 20 MA declining. This gave us a hint of bearishness. And what should you do when the 20 MA is declining? Don't buy the stock, because even if you buy here, look at it just mounts out and goes down lower. Then there comes a point where the MA trades flat, kind of moving sideways, and this tells us that the stock is kind of moving sideways, because of course it does. Sideways, you just bounce up and down here. And then here you can see the MA start to rise again, and look how the stock move up. And of course, at this point the MA declines, and it shows weaknesses and problem in the stock again, and look how the stock declines. All right, so this 20 MA can be a filter for you to when to buy stock, when not to buy stock. And the best times are when the 20 MA is rising. Later in this lesson, you'll learn why. So let's take another example. Tritium DCFC. Remember when the stock trades up and down the 20 MA? Flat MA shows sideways trading. Here it tried to go higher. You can see the MA tried to rise, but eventually it flattens out and declines. And this declining 20 MA show bearishness in the stock. So if you were thinking of buying the stock here and you saw the 20 MA kind of declining, would you want to buy? Of course you don't want, because the odds are not in your favor. So if you see a declining 20 MA, don't touch the stock. Look, if you touch it here, look how it went lower all the way here. And this is not a small move. From 200, it drops to about 33, right? So the lesson here is, do not touch a stock that is below its declining 20 MA. Never touch it. So we have this stock, Golden Heaven Group Holdings. We have it in a rising daily 20 MA. From here, it started to rise. And look, here we have a breakout. Breakout is where the stock trades sideways and then breakout of this consolidation. Here there is also another sideways trading. And then it break out. So when the 20 MA is rising and the stock trades and consolidates near the rising 20 MA, breakouts are actually playable and very high probability win rates. You could buy here, put the stop, ride it higher. Here is also a breakout. Buy the breakout, put the stop loss, ride it higher. Now, eventually, if the stock goes up too high, it will kind of be white and whippy and go up and down. The 20 MA, you can see it go down, go up, and then go down again, will go up. So usually white and whippy movements up and down the 20 MA hints of a top, and you have to be very careful. The moment it drops down here here it already show you a hint that it wants to top, and we have a double top here, and once it breaks, boom, all the way down. And declining 20 MA right here tells us not to touch the stop. Look, I think that you could buy here, but you keep on, trading sideways and even lower from there. So we have this Agenus Incorporation, Agen. You can see how the stock was below the 20 MA, and then it started to rise and boom, all the way up, and then it declined. Declining 20 MA tells us not to touch the stock all the way up here, but eventually stock will not always drop, they will bottom. So if you have like a double bottom pattern and you see the stock going back above 20 MA, this rise above the 20 MA confirms the bottoming process. So there's no way that the stock will bottom without going back to 20 MA. Okay, this is the first hint that it wants to bottom, kind of like double bottom pattern, and boom, all the way up, gap up. You can see the rising 20 MA already tells us that it wants to move higher to here. And here is a breakout, and it is a very viable breakout. Look, many people saw it, that's why it break out higher the moment it breaks above this consolidation. And then, of course, the stock starts to have a declining 20 MA. And we can sometimes combine the MA analysis with some other kind of technical analysis, like trend line analysis. Okay, you can draw trend lines, and if a stock drops below a trend line and also drops below the 20 MA, this confirms the bearishness of the stock. And look, declining 20 MA, and look where the stock goes, all the way down, right? From even at this point, 100 over bucks to 50 is, wow, it's a very, very bearish move, almost 50% of the price loss. So Intera Bio Limited, up and down the 20 MA, it was flat, sideways trading, told us not to touch the stock, and then here it started to rise. Although there was a decline, you can see that the 20 MA started to rise, and this actually gave us hints that the stock wants to go up. And then this consolidation and breakout of sideways trading range near the rising 20 MA, boom, it goes up. You can actually buy this trade, put a stop loss, and ride it higher. And here we also have the stock breaking above the downtrend line, where near or at the rising 20 MA, and boom, all the way up. And of course, there comes a time when the stock goes too far away from the 20 MA. You can see that the distance between here and here is small, but here and here is very big. Okay, if the stock runs up too fast and too far away from the 20 MA, you have to be careful because it might decline. So also be careful when it's too far away from the 20 MA. All right, you might want to take profits from your trade if it runs up too far. So that's something you need to keep in mind. All right, we have Q32 Bio, QTTB. Here the stock traded sideways and then have a declining 20 MA. Wow, should you touch it? No, because boom, all the way it went down. Declining 20 MA, then it flattened out. And about here, it tried to rise, and this will give you a hint. All the way here, the 20 MA was rising, isn't it? And look at all the possibilities that happen. So bullish continuation patterns above the rising 20 MA are very high probability setups. Here we have the 20 MA, we have an ascending triangle, buy it, put a stop loss, boom, move higher. Consolidation sideways at the rising 20 MA, buy it, put a stop loss, ride it higher. And then there's a bullish flag here, buy it, put a stop loss, boom, higher. And remember, the stock has gone up too fast, too far away from the 20 MA. So traders who buy the bullish flag here should already be taking profits, or at least raising their stop loss to break even. So next chart, we have this stock breaking above a daily downtrend line and going back above the 20 MA. And this hints of a bullish rise in the stock. So whenever you see a stock breaks a downtrend line, you can actually draw a downtrend line here as well. When it breaks the downtrend line in the 20 MA, boom, it goes up. Here, boom, it goes up. And of course, here we have the rising 20 MA, which hints of bullishness in the stock. All right, let's take a look at Coromedics, declining 20 MA. Again, you already know what to do. Do not touch the stock. Sideways trading, don't touch it yet. Declining 20 MA, don't touch it. And here the stock starts to rise. And what are you going to do? Get ready. Not buy straight away, but get ready for bullish setups. And here eventually it kind of form kind of ascending triangle. And you buy the breakout, put the stop loss here and ride it higher. And when it goes too far away from the 20 MA, what do you do? For traders who bought this breakout, you should have been taking profits here, at least half, or maybe raise all your stop loss to break even. So I hope that this short lesson has given you a lot about how to use the 20 MA. But before that, I would like to impart some wisdom to you. So the wisdom comes from Proverbs chapter 3. Go to Bible Gateway NIV version, chapter 3, verse 13. Blessed are those who find wisdom, those who gain understanding, for she is more profitable than silver and yields better return than gold. She is more precious than rubies. Nothing you desire can compare with her. Yes, in the stock market, you need to gain as much wisdom and understanding about the stock market as much as possible. Because when you have understanding and technical skills in the market, well, it's really worth more than gold. And I hope that this lesson has taught you a lot and that it's been beneficial, and I'll see you in the next one.